Look at THC. Might hear a baby in the background. Here we go. This is totally off the cuff. Let's look at the daily. Last 3 months. We got rejected at the 200 period moving average. 26.15. Look how it spiked it for 2 seconds there. Came down. 50's been supportive. We just landed on the 50 here on the Friday. 20.50. We closed right above it. I don't want to say it's really neither bullish nor bearish right here because you're in a long-term downtrend too. So let's take it back a little bit here. And you can see this really ugly downtrend since you hit 39. All the way down to 10. Nice little symmetry there. You get 20 right in the middle. That's pretty interesting. 40 down to 20 down to 10. So on a breakaway, I could see this hit. I bet 30 is probably resistance without even, let's find out. Yep, look at that. 29 is the high right there. 30, 34 is the high right there. Look at that. That's some symmetry right there. So if it does break through the 200, first obviously it has to break through the 20, which is my blue line. It would probably cruise on up to 30 before finding resistance. What you have to look out for though on the downside, for the bear case, is any close below the 50-day moving average. It's gonna be pretty bearish. And then this candle here, the low is 18.28. I'd be concerned if there was a close below 18.28 on a daily close, and more importantly, there's a gap right here. 17.16 open, 18.39. So somewhere in here, these are old Fibonacci lines, by the way, so don't pay attention to those. I probably made those a couple years ago, but it's interesting how they still look relevant. 18.13 down here. So I would watch 18 for support because you have 18.28 here, the low of this candle, and you have the gap right here from May. And there's some gaps down here too. So you might want to look at those if we get down below 15, which right now is pretty far away. Let's take a weekly chart look here. Not a good close at the end of the week here. 18.75 close. Okay, not terrible. But that's the start of a pretty bearish pattern right there. You're below the 20-week period moving average. Let's take a look at the monthly. You can see right here where we reversed right here. We finished below this candle here, 31.96 back in the end of the year. And then we closed below that at 31.64, and then watch what happened. Boom, 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 all the way down here, down to $10. Now, the key is to close above 29.30 on the monthly, and you should look at challenging way back up to 40 once again. So the numbers matter. If you don't believe in charting or technical analysis, and what I'm saying is probably nonsense to you, but you can look at any chart, and if you've learned what I've learned and you can see the numbers this way, they mean something. I don't know what THC does. A lot of the stocks that I'm asked to chart, I don't know what they do. Fundamentals matter, but not when it comes to day trading, and not when it comes to technical analysis. Technicals lead the way, they always have. And yeah, if you want to be a buy and hold investor, then you go Buffett style. You buy, hold, you don't care about the charts, and fundamentals are super important. But when we're just talking about trading and short-term stuff, day trading, swing trading, that sort of thing, charts are everything. So keep an eye on these numbers, they're important. Also, I just noticed the 200-month moving average happens to be at 29.61. And what did we talk about earlier as being resistance? About $30. So that was completely off the cuff analysis here with my baby in the background crying and eating things. Here you go, Emmy. Thank you. So I think that was pretty accurate for this quick little video. Thanks a lot for the tweets, guys, and please keep the tickers coming. It helps me stay in practice, and I like helping out too. Thanks, and remember, don't let the trade control you.